Yes, sir. I just started.
Just give me the host access.
Okay. Done, sir.
Okay. So, mhm. So starting from today, so we are going to start on the project billing and also the enterprise contracts. So far, we have seen like a project foundation, project costing, project control. Okay, these things we have seen, and today in today's session, we are going to start especially on the enterprise contracts. Okay, subsequently the project billing as well. So enterprise contracts is a one module and the project billing is another module, but these are two modules will work together. So if there is no enterprise contracts module, there is no question of the project billing model. That is the reason. So uh, these are two modules will work together. Okay. So let us say in the enterprise contracts model, particularly we wanted to create a customer specific contracts. Okay, then what is meant by a contract? If I wanted to do something, I should get an agreement from the customer side. Okay, so that agreement I'm going to call as a contract in the cloud application. For example, we have a company called Wipro, and the customer is the Reliance. Okay, so Wipro is maintaining one software company, and Reliance is maintaining the huge business with the different lines, different line of businesses. Like the Reliance is having their own business in the fruit marketing, and Reliance is having their own business in the cloth marketing and mobile business, and so they have a business in the multiple areas. Each area I'm going to call as a one line of a business. Okay. So finally the Reliance owner has decided to implement one application to maintain their business in a one particular software, and finally they have decided to go with a Oracle Cloud application. Okay. So finally this Reliance has given a chance for the Wipro to implement the Oracle applications for their business. So here the Reliance is the customer or client, and the Wipro is the company. Wipro is the company. So what happens is in between the Wipro and the Reliance, there will be a agreement. There will be an agreement. Like in the agreement, there are so many terms and conditions which both have to agree. Like Wipro have to agree certain terms and conditions mentioned by the Reliance, and the Reliance also has to agree the few terms and conditions which has mentioned by the Wipro. So that means an agreement is it's like a bond between the company and the customer, where everyone has to agree the terms and conditions. Okay, now the Wipro can say like, so if you give us at least 90, if you give us at least 90 lakhs, so that I'll finish the project within a time. So the Reliance, the customer has to agree like, yes, I can pay the 90 lakhs amount, just you have to finish the project within a time. That means the Wipro is demanding to pay 90 lakhs. 90 lakhs, but end of the day, Reliance has to agree to pay the 90 lakhs. So this is the one terms and conditions. Both have agreed. When it comes to the second one, the customer says like the project should be completed within 6 months only. Here, the Wipro has to agree. Yes, I'll give the assurance. So my team definitely it will complete by the end of maybe in the next 6 months or something. The project is going to start on January 1st, 2024, and it may finishes on June 30th, 2024. Okay. So this should be agreed from the Wipro side. This is a demand from the customer side, and this should be agreed by the Wipro. And the first point, it should be demanded by the Wipro, and it should be agreed by the customer. Okay. So whatever the agreement amount is, the 90 lakhs or 1 crore or 2 crores, so the customer is asking, the Wipro is asking that should be payable within 3 months or within 4 months or within 6 months, that two equal installments or three equal installments. Okay, so this type of terms and conditions they'll frame in one agreement, and both have to sign on the agreement. Okay, so this is called as an agreement. In the lawyer versions, I used to call as a agreement. The same agreement I used to call as a contract in the cloud application. In the cloud application, if Wipro gets a contract from the Reliance, so that Wipro can start a project, and so that Wipro can assign the resources on the project execution, so that the Wipro can assign the project manager for the project execution, etc., etc. Got it? So, if this project is a 6 months, like starting from January till June, so as per the agreement, for every 2 months, the customer has to make the payment. Like it is a 90 lakhs, that means for every 2 months, the Reliance has to make the payment as a 30 lakhs. So, if project is started in January, that means by the end of February, so the Reliance is going to make 30 lakhs as a payment for Wipro. Then again, March and April. So in April, so almost, so the milestone is going to reach. That means by the end of April, again the customer is going to make the payment of 30 lakhs. That means the Wipro is going to generate the invoice for 30 lakhs by the end of February and send it to the customer. As soon as the invoice is received by the Reliance is going to make the payment based on the payment terms. Okay, so this is how the contract will be in the cloud application. Okay, so this is a generic contract. Okay, somewhere you can take the A4 sheet or 10 rupees bond or 100 rupees bond, and they'll write some terms and conditions, and the Wipro boss has to sign over there, and the Reliance boss has to sign over there. Then from there, it will go in a smooth manner. Okay, so that is a paperwork, but somewhere I have to create this agreement or contract in the Oracle applications. Then which module is suitable to create this agreement or contract in the Oracle applications? That is what my question is. Enterprise contracts is the module, and it will allow you to create an agreement, nothing but a contract in the system. Nothing but a contract in the system. Okay. So while creation of a contract or agreement, we have to provide certain data, like for which client you are creating this contract, what is the contract amount, okay, on what basis you are going to generate a invoice and send it to the customer. That is that information also we used to provide in the contract itself. Okay, what are the payment terms? Once the Wipro has generated the invoice and send it to the customer. Okay, once the Reliance has received the invoice from the Wipro side, so how many days it will take to make the payment with the Wipro? Nothing but a payment terms. Okay, so so these things, everything is maintaining in the contract level. Everything we are maintaining in the contract level. That contract we are creating in the module called enterprise contracts. Enterprise contracts. Contract, against a contract, we are recognizing the revenue, and we are generating the invoice, and we are generating the invoices and send it to the customer. So these generating the invoice and the recognizing the revenue, these two things are happening in the project building module. These two things are not going to happen in the enterprise contracts module. Enterprise contracts is a module, and which allow you to create only customer contracts. That's it. Against a contract which you have created in the enterprise contracts module, and whatever the invoices you are going to create and whatever the revenues you are going to recognize, these two things are going to happen in the other module called project billing module. That is the reason I can say enterprise contracts module and the project billing module, they will work together in the system, Okay. For example, I don't create any contract in the enterprise contracts module. Then what is the need of creating invoices? And then what is the need of recognizing the revenue? Okay, for which customer you are going to create an invoice? For which customer you are going to recognize the revenue? The whole customer information we have mentioned in the contract itself. That means finally you remember, if there is no contract, there is no question of generating the invoices and recognizing the revenue, especially in the PPM. Okay. Finally, you remember a few points like enterprise contracts is a module where it will allow you to create a customer contracts. Against this customer contracts, whatever the invoices you have and revenues you have, so that is possible in the project billing module. Okay, that is what the importance of these two modules. Okay, let us see. So far we have accessed the project costing module. Okay, also the different modules like the financials module, like the payables module, and the fixed assets module, and the general ledger modules, etc., etc. In the cloud application, if you wanted to access any module, every module should have some specific roles. If I wanted to access the project costing, I should have some roles like a project accountant, a project administrator, project manager. If I wanted to access the account payables module, I should have a roles like account payable specialist, account payable supervisor, account payable manager, etc., etc. If I wanted to access the fixed assets module, then the specific roles are like the asset manager, asset accountant, asset accounting manager, etc., etc. Similarly, as we are starting the project billing module and the enterprise contracts module, for enterprise contract module, we have a certain roles. For project billing module, we have a certain roles. Okay, now if I wanted to access this enterprise contracts module, we need some prerequisites. Okay, the first one is the module specific roles, and specifically for the enterprise contracts, so we have a three roles. One is enterprise contract administrator, and enterprise contract manager, and enterprise contract team member. Out of these three roles, for us, whenever I wanted to create a contract in the cloud application, this enterprise contract administrator is enough. Enterprise contract administrator is enough. So my user is a ppm 02 dot student. So that should have assigned with a enterprise contract administrator, so that in the home page, I can able to see the tab called contract management. Under the contract management, I can able to see the work area called contracts. That means if I go here, let me show you something here. If I go to the home page, in order to access the enterprise contracts module, then what is the tab I can refer? The contract management. Okay. See this contract management. Okay. Especially in the contract management tab, if you assign the enterprise contract administrator role, I can able to see this contracts work area. But this invoice and the revenue, these two are not specifically for the enterprise contracts management. Still, the Oracle has incorporated these two work areas under the contract management. That means, so this is specifically for enterprise contracts module, and these two are specifically for the project billing module. If you assign the enterprise contracts administrator role, I can see this contract management tab, and that too I can see only this. Along with it, there is one more role called project billing specialist. If I assign the project billing specialist for my user, I can able to see these are two work areas like a customer invoicing and the company specific revenue. And these are two work areas I can able to see under the contract management only. Under the contract management only. For example, I don't assign this enterprise contract administrator. So I don't see this contract management and I don't see this contracts work area. Okay, so without assigning this, if I directly assign this a project billing specialist, what happens? I can see the contract management icon. I can see the contract management tab here. Okay, but I don't see this. Instead of this, I can see invoices and the revenue. Invoices and the revenue. Okay, ultimately, whenever you wanted to work on the enterprise contracts module and the project billing module, and your user should have assigned with the two roles. So one is enterprise contract administrator and other one is a project billing specialist. So that I'll get an access to the contract management. That too, these are three work areas. That too, these are three work areas. Okay. If you are working on a project costing module, I should get an access to this project tab. Within this, I can create a project like a project financial management. For this, project administrator is required. Within project costing, I can able to incur the cost. I can able to book the cost for my project. For that, I can able to get an access to this cost work area. This is possible because of a project accountant role. Okay, so this type of the remaining are dashboards, and this is especially for the capitalization purpose. Anyhow, will so if the project accountant is assigned, then automatically I can able to see this. Okay, so project costing, then you can refer to this tab, and project billing and enterprise contracts, and you can refer to this tab. Okay, so if I wanted to access the enterprise contracts model, the first prerequisite is the model specific roles. If I wanted to access the project billing model, the model specific roles are this. Okay. So excluding this, now I have a user and my user is already assigned with the model specific roles, so that is fine. Okay. But Reliance is having the business in multiple countries. But so, as a billing specialist, as a contract administrator, whether you are responsible for India or UK or US or Japan or Pakistan or etc. etc. For that, the user should have a data access. User should have an access to the business unit specific to enterprise contracts, module roles and the project billing specific roles. Okay, see, as a ppm 02 dot student, as a ppm 02 dot student. Okay, so as a ppm 02 dot student, I am acting as a enterprise contract administrator for the business unit called the US business unit. That means as a user, I am acting as an enterprise contract administrator for the business unit called US business unit, and also for the business unit called UK business unit. As a enterprise contract administrator, I am purely responsible for US business unit and UK business unit for creation of contracts. Here, as a ppm 02 dot student, so I am purely responsible for creation of invoices and the revenues for the business units called US business units and the UK business units. That is what we used to provide the data access for the respective business units, specific to your model specific roles, specific to your model roles. Okay. So any questions here? Yes.
No. For roles, I have no questions.
Deepak,
No.
Sai,
I'm good, sir.
yeah, Veera, do you have any questions? Okay, okay. So let's come down, come down. So basically, we have two different types of contracts in generic. In generic, we have two different types of contracts. One is a fixed bid contracts, another one is the T&M contract. That means the time and the material specific contracts. Then what is the difference between these two? What is the difference between these two? Sometimes, if you go for the interview, if you may face a question, what are the different types of contracts? What what are the different types of projects also? This is what the question. But we don't know what is the answer in the interior mindset. Okay, there are multiple answers for this question. Okay, in generic, I can say there are different types of the projects like fixed bid projects, T&M projects, etc., etc. Okay, in other words, I can say we have a capital projects, contract projects, and indirect projects. I don't know what is the answer in the interior mindset, the interior mind. Okay, so if the interior is having like if they are expecting like the fixed bid contract, fixed bid project and the T&M project, even if you say contract to capital and indirect, so that is the wrong answer only. Okay. In generic, we have two different types of the projects or contracts, like a fixed bid projects or a T&M contract, T&M projects. Nothing but the contracts. Okay. So what is the difference between the fixed bid and the T&M? Okay. So in a fixed bid, what is happening is the customer and the company, okay, both will agree on the certain amount. Both will agree on the certain amount. Okay. The Wipro is asking to the Reliance like, if you give us a 2 crore rupees, then I'll finish the project within the deadline. But you don't care, but the customer don't care how many resources the Wipro is going to allocate. Then, so some nonsense information, the customer, it doesn't care about anything. Okay. So the customer is paying 2 crore rupees, which the Wipro is expecting. Okay, the lump sum amount, both have to agree to start a project. Okay, which is nothing but a fixed bid project. Okay, now when it comes to the second one, T&M project or a contract, so if you allocate the 5 resources, every resource is working for 8 hours in a day. That means if you allocate 5 resources, the customer is going to make the payment only for 5 resources, that too in hourly basis only. Today, I have taken a leave, but I have assigned for this particular project, I have taken a leave today. That means the customer is not going to make a payment for me today because I did not work today. I was on the leave today. Okay, it's completely based on the resource allocation and that too number of hours, number of efforts. If you really work for 10 hours today, then customer is going to make the payment for 10 hours based on the bill rates, based on the bill rates. Okay, we'll give you the clarity on this. If you go with the first one, the lump sum wise, the company and the customer both have to agree with a certain amount, then the project will come into a picture and they can start working on it. Okay, if it is in the second case, the customer is purely making the payments based on the resource allocation and based on the efforts from the resourcing side. Okay, you come down. So if you consider an example of this fixed bid project, as is well, the same example we consider here, the same example we consider. Okay. So Wipro is a company and the Reliance is the customer or a client, and the Reliance customer has given a project for Wipro for the project execution. And for that, Wipro is created one contract. That means in the contract, there are so many terms and conditions, like the project has a so before project is finished, the customer has to make the payment of 90 lakhs. That means the contract amount which both have agreed as a 90 lakhs. So that should be payable in the 3 equal installments. So as the project contract duration is 6 months, that should be payable in the 3 equal installments. So that means every 2 months, so the Wipro is going to raise an invoice and send it to the Reliance customer, and based on the invoice received, the Reliance is going to make the payment. Here, Wipro and the Reliance both are agreeing to implement the project or to support the project, to provide the services or something. Both are agreeing with the 90 lakhs. That means for certain amount only both are agreeing. So this is comes under the fixed bid project. This is comes under the fixed bid project. So in the fixed bid project, how the Wipro is going to generate the invoices and send it to the customer? Okay, this is what the question is. In the agreement, so before the project is started, both have to agree some certain terms and conditions, right? Out of those terms and conditions, one condition is whatever the agreement amount, whatever the contract amount, that should be payable in the 3 equal installments, right? What is the duration? 6 months is the duration. That means starting from January to till June. These are the 6 months. Wipro has to finish the project. Wipro has to start the project on the January and may finish the project within the June. Okay, one of the condition is so whatever the agreement amount which they have agreed, that should be payable in the 3 equal installments. As we are completing this project within the 3 months, every 2 months payable. That means when I started the project on January, and by the end of February, 2 months is going to over. That means, so the Wipro is eligible to generate the invoice for the customer. For how much amount the Wipro is going to generate the invoice? What is the agreement amount? 90 lakhs. Okay, that should be payable 3 equal installments. That means 90 lakhs divided by 3, and we'll get a 30 lakhs. 30 lakhs is the invoice amount. Otherwise, if 90 lakhs should be payable in the 5 installments, that means 90 lakhs divided by 5. We'll get a certain amount. Okay, that should be the invoice amount. In our case, if 90 lakhs should be payable in the 3 equal installments, that means for every 2 months, we are going to raise a invoice for 30 lakhs, and that should be, that you can send it to the customer. Okay. So this is what the customer invoice, and this we wanted to send it to the customer location. Okay, my question is how to generate this particular invoice, how to generate this particular invoice in the cloud applications. Okay, so whenever I wanted to raise a customer invoice for 30 lakhs or 20 lakhs or 1 crore rupees, so the immediate prerequisite is the event. Okay, event is comes under the process, like we have created a project, is comes under the process. We have entered the budget, comes under the process. We have entered so many transactions, comes under the process. We have done the accounting, comes under the process. The many things. Similarly, invoice creation, invoice generation is comes under the process. And event creation is a process. But whenever you wanted to create an invoice, especially in the fixed bid project, the prerequisite is an event. Event is also comes under the process. But whenever you wanted to create an event, the immediate prerequisite is the event type. Event type. Okay. But event type is comes under the setup and event customer invoice. These two are comes under the process. These two are comes under the process. So how we are generating the customer invoice in the fixed bid contract is we wanted to generate the customer invoice based on the event. In the event itself, we have to mention the on what date you are going to create a customer invoice. The customer invoice date we are going to mention in the event. For how much amount you are going to create a customer invoice, that amount also we are going to mention in the event only. Okay, so whatever the information required to generate the customer invoice, so the same information we are mentioning in the event, subsequently we'll go ahead and we'll run a program called the generate invoice. So when I run the generate invoice program, that will go and check the event, whether event is created or not. If event is created, obviously based on the event, the customer invoice will get generated. Whatever I'm saying here now, that we wanted to do it in the next 1 week or next 10 days in the system. Okay, this is at a very high level. In the fixed bid contract, we are generating the invoice based on the events. Event is a prerequisite to generate the customer invoice in the fixed bid project. Similarly, for the revenue also, if you wanted to recognize the revenue, and the event is the prerequisite. Okay, but whenever I wanted to create an event for generating the invoice or recognizing the revenue, but while creating the event itself, we have to provide the event type. We have to provide the event type. Event type is comes under the configuration of the project billing module, which is comes under the configuration of a project billing module. So in the event type, what we have to mention in the event type specific to this event, what we are going to mention in the event type. Okay, so whether you are creating the event for the invoice or revenue, the segregation point, we don't know. We are in the event screen. We don't know whether this event is created for customer invoice or a company specific revenue. Okay, this segregation will be mentioned in the event type itself. This segregation will be mentioned in the event type itself. Okay, so if I open the event type screen, what happens is there are three options I can see: invoice, revenue, and adjustments I can see. If you enable the tick mark for revenue, that means you have created a event type only for the creation of revenue specific events only. If you enable the invoice, here in the event type, that means this event, through this event type, whatever the events you are creating, those events are eligible for customer invoice generation. That's it. Okay. Otherwise, if you delete this and if you enable the revenue, whatever the events you are creating based on this event type now, those events are eligible to recognize the revenue. Otherwise, if you mention both, that means event type is having a few columns like invoice, revenue, adjustments. I enabled invoice and I enabled revenue. That means through this event type, whatever the events we are creating, those events are eligible for generating customer invoice and also recognizing the revenue in a company. Okay, adjustments. So if you enable this, what happens? So through this event type, whatever the events you are creating, through that event, whatever the customer invoices you are creating and revenues you are creating, after that, if you wanted to do any adjustments for your customer invoices or revenue, yes, it is possible because of this particular option is enabled at the event type level. This is all happening in the fixed bid project only. Event type and events are purely specific to fixed bid contracts or processing only. It's nowhere related with the T&M. It's nowhere related with the T&M. Okay. Any questions on the fixed bid contract or fixed price contracts? In lump sum amount, I can agree with a customer. And based on the terms and conditions, I can generate the bill based on the event and I can send it to the customer and the customer will make the payment for us.
So question is, if any this particular contract duration or contract amount got revised during the period, so this particular contract will get extended or a new contract will create for the additional time and money.
See, so on time, if the contract is not finished, okay, so as a consultant or as a end user, you should get a paper. Okay, you should get an agreement paper or a contract paper. Then you can revise it by extending the contract or by extending the project and all. Okay, so it's no way creating a new contract. It's no way creating the no way creating the new contract in the system. Okay, so that is a one thing. Okay, it is a decision from the owner side. Ultimately, we'll get the email communication. Okay, once the email communication by attaching the agreement paperwork, scanned copy or something. Based on that, we are going to extend the contract. Okay, if you are extending the contract, you should have a proof, right?
Yeah.
Okay, so it's a problematic with the company boss and the customer owner.
Okay.
Okay, if you get officially, if you get a email confirmation and all, then we can extend the contract. Otherwise, not required. See, yesterday itself, I got a one ticket in the company. Like one resource is working. One resource is working for one particular contract, but the contract is that means the contract is started. The contract is started on the January. Now this is a February. The contract is ended on February 15th only. Still employee is working for the same contract, same project only. Okay, but officially the contract is not extended. I got a ticket. I'm not able to enter the timesheet for this particular project. Okay, if I go on the cross check, the project is already end dated. That means the contract is already end dated. Officially, the contract is not extended in the system. Okay, so they have a verbal communication like you can go ahead and continue the contract maybe in the next 3 months or 4 months. But my company did not get any official confirmation from the customer. If they get an official confirmation, so that they will send us a mail to us for the contract extension.
Correct.
Here, the employee don't know this communication. But employees simply, they can raise a ticket, I'm not able to enter the timesheet for this contract or project. They don't know all these background theory, right?
Yes.
Okay, so that is what it is happening. Okay, so this is what the process which is happening in the fixed bit. Any questions? This whole process I can see in 2 classes. You don't worry about it. How to generate the invoice, how to create an event, then how to create a event type as part of the configuration. Okay, we'll tell you everything. You don't worry about it. This is a high level stuff. Okay, then come to the second level contract, which is the T&M contract, which is a T&M contract. Okay, let us say, so we have a one project which is like a Reliance ERP implementation project, and this project has a different task like a designing phase or development phase or testing phase, or etc. etc. So initially, when the project is started, nothing but when we are in the designing phase, the company is going to allocate a few resources to complete the designing phase. Okay, so in such a way, Wipro has allocated 5 hours on behalf of a PPM, and Ranganath on behalf of financials, and Veera on behalf of HCM, and Anup is on behalf of DBA. Okay, Wipro has got a project from the Reliance, so Wipro is going to start a project by allocating the resources. Okay, here project is nothing but for a project we are tracking the expenses. We are tracking the expenses, so because of that only we are maintaining a project. But ultimately the contract is a different. So contract start date and end date are a project start date and end date only. Okay, for a contract, I'm not going to track any expenses. That is the reason against a contract, whatever the contract information, with the same information, we are creating a project so that the employees can enter the timesheet, so that we can enter certain transactions on the project for the tracking purpose. Okay, so that is the reason. My project is started. When contract is signed, my project is started, and the company is allocated few resources, at least one resource from the different modules. Okay, so you don't get any confused. This is not a contract. This is a project. Okay, once a contract is signed, then only I can create a project. Otherwise, I don't create a project. If I create a project like this project, I need to associate at the contract level. We have created this project, but I don't know for which contract I created this project. That means in the contract screen itself, somewhere I have to associate this particular contract, this particular project. Okay, that I'll discuss in detail. You don't worry. So after contract is signed, we started creation of the project in the system, and right now we are in the designing phase, and the company is allocated these resources, and one resource from each of the module. One resource is from each of the module. Okay. Initially, I planned for the execution of this designing phase, I planned 160 hours for Fayaz and 160 hours for Ranganath and 120 hours for Veera and 100 hours for Anup. Okay, so these are the cost rates. These are the cost rates. The company is going to fix these hourly cost rates for every employee based on your packages. Based on your package. Based on the Fayaz package, the company has fixed $500 as a cost rate hourly basis. Okay, for Ranganath, the cost rate is 600, and for Veera, the cost rate is 700, and for Anup, the cost rate is $800. Okay, if I sum up these two, 160 multiplied with 500, that means 80,000 USD and 96,000 USD, 84,000 USD and 80,000 USD. If Fayaz works for this designing phase, ultimately Fayaz is getting 80,000 USD. Ranganath is getting 96,000 USD for the completion of this designing phase. Later, whatever the efforts planned by the project manager, later the project manager can extend these number of efforts. That's a different story. If project manager can change these number of efforts automatically, so these figures may get changed. Okay, so ultimately the Fayaz is getting, these employees are getting these many, this much amount for the execution of this designing phase. But if you are working for, if these employees are working for a designing phase for the execution, that means a company is paying this much amount for the execution of designing phase towards these employees. That means company is going to get some amount from the customer side towards you. That means you are working for a designing phase. You guys, 4 employees are working for the designing phase. For 4 employees, the company has given this much amount for the execution of this. But for the execution of this designing phase by these employees, company is going to get a certain amount from the customer for the same number of efforts only. Okay, here company is giving this much amount based on the cost rates, hourly cost rates. Okay, if you work for these many number of hours, and you will get this much amount based on the cost rates only. But somehow the company is going to get some amount from the customer side on behalf of you. That means, see, these are the bill rates. Nothing but based on your package, the cost rates will be decided. But based on the agreement terms and conditions, based on the company policies, the company will fix the bill rate for you. Okay, so the company has fixed 1,000 rupees as a bill rate for Fayaz, and 2,000 as a bill rate for Ranganath, and 1,500 is a bill rate for Veera, and 1,300 is a bill rate for Anup. The same number of hours you have worked, this 160 hours is multiplied with 1,000, and the company will get 1,60,000 rupees from the customer side. The company is getting $1,60,000 from the customer side on behalf of Fayaz, but the company is paying only 80,000 USD for Fayaz. But remaining 80,000 USD is a profit for the company. This is in the form of a salary, and this is comes under the invoice, a customer invoice. The company is generating the customer invoice based on the employee timesheets. Based on the employee timesheets. In previous case, the customer invoice is based on the event. But here, in this case, the customer invoice is based on the employee timesheets. If employee enters a timesheet for 20 hours, 20 hours multiplied with these bill rates and invoice will get created. If employee enters a timesheet for 40 hours, for 40 hours only, this bill rate will get calculated and invoice will get generated by the system. Got it? So here the customer invoicing is based on the event. In the event only, we have mentioned the invoice amount. Here, the invoicing is completely based on the timesheets only. Okay, that is the reason I can say T&M contract, time and material contract. If you work for 100 hours, the customer will give you the money only for 100 hours based on the bill rates. But company is giving the salaries based on the cost rates for the same 100 hours. Okay, so this portion is comes under the billing and this portion is comes under the costing. Got it, ma? Any questions? Sai?
No, sir.
Ranganath, do you have any questions?
Yeah, no.
So this is what it is happening in the system. Now, when it goes to how these are calculated, when it comes to the costing side, how the number of hours are calculated with the cost rates and how the system will calculate the salaries here. Okay, already we have discussed. We have a 3 different setups are available like rate schedules, costing rules, and organization costing rules. And if you create a rate schedule, and here we are going to mention. Here we are going to mention the rate schedules. For Fayaz, I'm maintaining the hourly cost rate is 500. For Rangana, the hourly cost rate is 600. For Veera, 700. For Anup, hourly cost rate is 800. Okay. So whenever you enter the timesheet for 160 hours or 40 hours or 20 hours, so for the calculation and all, the system will refer these setups for the calculation of the transaction. That means the salaries calculation. When it comes to the billing side, bill rates for the same employees, we are maintaining the bill rates. Okay. Here we are maintaining the cost rates. Here we are maintaining the bill rates. Bill rates are useful for generating the customer invoice and the cost rates are useful for generating the calculating your employee salaries. Got it. So here also I can use the rate schedules set up to maintain this, and here also I can use the rate schedules set up to maintain the cost rates. Ultimately, whatever the rate schedules you are maintaining for the cost rates, those cost rate schedules we are going to key the input as for the remaining 2 setups like organization costing rules and the labor costing rules. But in case in a billing side, whatever the bill rate schedules we are maintaining, those bill rate schedules we are going to maintain at the contract level. We are going to maintain the contract level. As we are maintaining the cost rates or bill rates, somewhere we have to assign, somewhere we have to map, so that the system knows these are the cost rates for the employees, or these are the bill rates for the employees. Okay, So the cost rates we are going to assign at the organization costing rules so that the system knows. The bill rate schedules we are going to assign at the contract level so that the system knows these are the bill rates I should consider for the generation of a customer invoice. Got it? The definition is at the same only. If you go to the managed rate schedules, I can maintain the cost rates like this. Also, I can maintain the bill rates. This is a cost rate schedule and this is a bill rate schedule. But the same employees are available, but rates are different, right? This rate schedule, I can use it for the salary calculations, and this rate schedule, I can use it for the customer invoice generation. But system wants to know which one I have to consider for a customer invoice generation and which one I have to consider for the salaries calculation. That means this is a rate schedule, somewhere I have to map, and this is the place. And this rate schedule, somewhere I have to map, and this is the place. So that the system knows for the calculations and all. Any questions here? So this is how the difference between the T&M contract and the fixed bid contract. In fixed bid contract, invoicing is completely based on the event. And T&M contract, the invoicing is completely based on the employee timesheets. Employee timesheets. This is what the difference between fixed bid and the T&M. This everything, this is at a high level, everything, whatever the discussion we had now. So everything we are going to incorporate in the system. I'll show you how to create a contract, how to map the information at the contract, how to map the bill rates at the contract, how to approve the contract, then how to generate the invoice based on the event, how to create the event, how to generate the invoice based on the timesheet. Everything I'll show you. Okay, this is a theoretical portion. Okay, so this is what the difference is between the fixed bid and the T&M contract. Okay, now there is other type of the contract like it's completely based on the progress. It's completely based on the progress. So if my project is completed for 30%, so I can generate the customer invoice only for the 30%. If 50% project is, if 50% contract is completed, so only for the 50% I can generate the invoice. So this is also another billing we used to talk about in the upcoming sessions, like percent complete. Percent complete billing. This is also the another type of billing. Okay, we are going to talk about. Okay, based on the percentages, based on the percentages, based on the completion, based on the project completion. Based on the project completion, invoice will get generated. Okay, this I'll discuss. You don't worry. Okay, so this is a critical portion, something like the introduction part of the enterprise contracts and also the project billing modules. Now we'll jump into the configuration. What configuration is required in the enterprise contracts model and what configuration is required in the project billing module. Okay, so there are so much of setups are available, but we wanted to discuss what are all the mandatory setups are available for enterprise contracts and also for the project billing module. Okay. So these are the mandatory setups. These are the mandatory setups before I move into the enterprise contracts and the project billing. Especially on the enterprise contracts, the first three are very, very important. That means the first, until unless you finish these three setups or configuration, and you cannot go with the enterprise contracts. So, until unless you finish these setups or configuration in the system, and you cannot move into the project billing. So these setups are comes under the project billing, and these setups are comes under the enterprise contracts. Sometimes you may face a question from the interviewer. So what configuration you have done for the project billing? What configuration? What configuration you have done in the project billing? Then you can say like event types, invoice methods, revenue methods, invoice formats, billing cycle, and bill rate schedules, etc., etc. Okay. So then you can say these three also, but particularly they are asking what configuration you have done in the project billing. I'm not asking about the enterprise contracts. So particularly if they ask a question, what setups you have done in the project billing, then you should say only these. Particularly if they ask you a question like what configuration you have done in the enterprise contracts, and you have to say this. Contract types, contract line types, and the customer contract management business function. And when it comes to the project billing, event types, invoice methods, revenue methods, invoice formats, billing cycles, and bill rate schedules. Bill rate schedules. Okay. Now when it goes to the system, because of this is the configuration, where should I go? Where should I go? So we'll go to the user, and we'll go with
Securities and
the setup and the maintenance.
setup and maintenance.
Okay. Here I can select, so whatever the configuration you are going to do for the enterprise contracts, for that I have to select this enterprise contracts. Okay. So this functional area is having so much of the setups like a contract types and customer contract management, business function properties, and this will be for the business unit level. Okay, these are the mandatory setups for the enterprise contracts. See, show option is there, required task. Instead of this, if I maintain the all task, the optional configuration also the system will show you. The system will show you the optional configuration also. Whenever I change it to the required task, the system will show you the mandatory configuration or mandatory setups list here. Okay. But I told you the contract line type. The contract line type is included with the contract line type, right? See, let us say contract line types. When I go with the contract type, there we can see a contract line type. I'll tell you, don't worry. Now, excluding this enterprise contracts module, if I wanted to do the configuration of the project billing, then obviously I can able to choose the project financial management only. There is no other offering where I can do the setups for the project billing module. Okay. If I choose this project financial management, we'll get a functional area. We'll get a functional area called project billing base. And this functional area, which is having the required task, the mandatory setups like event types of billing cycles, revenue methods, invoice methods, then auto accounting rules, and whatever we have mentioned here, those are the setups from the project billing base. Okay. If I change it to the all task here, what happens? The optional configuration also I can able to see here. The optional configuration also I can able to see here. Got it? If I change it to the required task, then I can see the mandatory ones. Okay. We'll discuss each and everything. Each and every configuration we'll discuss. You don't worry about it. Okay. Like a project should have a project number. project name, project start date, project end date. Like a project should have a project manager. Similarly, contract should have a name, contract should have a number, and contract should have a contract start date and end date. Then contract should have a contract administrator. The project manager is responsible for entire project. So contract administrator is responsible for a contract. Okay, how you wanted to follow your project numbering, automatic or manual. Similarly, for the contract also, how you are maintaining your contract numbering, whether you wanted to go manually or automatic, manually or automatic. If it is a manual, that is okay. We have to enter at the time of contract creation. If it is an automatic, so whether you are entering only numerics or you are expecting to enter the alphanumerics. That means you have to enter the digits along with the alphabets as well. Once the contract is created, at the end, once the contract is submitted, okay, then who will approve the contract? Who will approve the project once the project is submitted? The project manager is going to submit, right? Similarly, who is going to approve the contract here? Otherwise, when contract is created by default, I can see a contract status as an active. How you are expecting, how your customer is expecting here. Okay, these are the similarities. These are the similarities. If I wanted to do any changes for your project, I should go with the manage project financial settings. I can see edit button for every column in the project screen. Similarly, once a contract is created and make it as an active, if I wanted to do any changes for your contract, like maybe from today, for today the contract is ended, finished. Maybe unofficially we got the we got the confirmation from the customer. So this contract is going to extend for another 6 months, but officially I did not get it. Officially, if I get it, and so that I can do some adjustment for my contract for the extension of for next 6 months. Okay, how do you extend your contract? That means you are doing some change. You are doing some adjustment for your contract. Got it? Okay. Initially, I got the contract for the 6 months for the implementation. Next, another 6 months, I may get a contract for the support. So whether you are going to create another contract for the support, or do we maintain the same contract for the support as well by creating the different line, how you wanted to move further. Okay, so these things we are going to discuss elaborately when the process will start. Once the configuration is completed, then we'll jump into the process like contract creation and doing the amendments for your contracts and invoice generation and doing the adjustments of your invoices and revenue generation and doing the adjustments of your revenues. Okay. So this is how we can able to do it. So as per the last session discussion, we completely discussed about the capital project end-to-end process. Like we have created a project and made it as an active, and we have booked the cost for the project. End of the day, if you don't have any expenditures for your project, and we have summarized the project expenses and converted as an asset. For that, we have transferred the project expenses from PPM into the fixed assets model. Okay. Similarly, in the project billing module, whatever the invoice you have generated in the PPM, is it based on the event or based on the project progress or based on the employee timesheet? Finally, it should get transferred to the account receivables module. From the account receivables module only, the customer invoice will be sending to the customer location. Straight away, we cannot send the customer invoice into the customer location from PPM itself. Okay, how we have transferred the project expenses into the FA model for the asset creation. In the same way, whatever the invoice we have created in the PPM, that invoice we wanted to send it into the AR, nothing but account receivables model. Complete customer billing is happening in the account receivables model only. We are sending the invoice draft copy. We are sending the invoice copy into the account receivables. The subsequent steps they are going to complete in the account receivables module, and they can send it to the customer. Okay. Now, if you see like in a project costing, we are handling the capital project. Okay, nothing but so from PPM to the flow is from PPM to the flow is FA. Okay. Now in a project billing, we are dealing with a contract project. That means from a PPM, the customer invoice we are sending to AR. Okay. Here in FA, asset creation based on project expenses, and here customer billing based on customer billing is customer billing specific to project. Okay, again it's based on event or time sheet or project progress, etc. Okay, so far in the cost collection, what happens? So far in the cost collection, we went for the procurement, and we went for the account payables, and we went for the expense management. We went for the expense management, we went for the OTL, and also we went for the PPM. Okay, for all these things, finally, irrespective of the module where we have entered the transaction, okay, finally, the transactions are moving into the PPM. Okay, that means from the outside, the data is coming to PPM. Okay, in these two cases, the data is going out. The data is going from the PPM to the other modules. Okay, here all project expenses are going with FA for asset creation. Here, all project expenses like timesheets and events are going with the AR module for the customer billing. That means here the project expenses are going in the form of a draft customer invoice, but invoice processing is going to happen in the account receivables module only. Got it?
Yes.
Okay, so simply so here there are two terms. One is the inbound and other one is the outbound. Inbound, nothing but we are from the PPM. Inbound, nothing but the data is coming from outside into PPM. Inbound. Okay. Outbound, as we are working with a PPM, we are transferring the information from PPM to outside model like AR. Okay. In the cost collection, we have the inbounds. Okay, so in the asset creation or customer billing, we have outbounds. Okay, So especially we are using these terminologies, inbound and outbound. Okay. So starting from tomorrow I'll complete all the configuration, and from day after tomorrow onwards, so create. We'll start first of all. Initially, we have to focus on the fixed bid contract. Okay, it will take at least 2 to 3 sessions. Okay, at least 2 sessions for the completion of the end-to-end process. How to create a contract, how to map the data in the contract, what type of information we are going to map in the contract. Okay, against a contract, how to create an event. Against an event, how to create a invoice, how to create a revenue, how to transfer the invoice into the AR, how to transfer the revenue into the GL. Okay, this process, it will take at least 2 to 3 sessions for fixed bid contract. Okay, so when I jump into the timesheet, it will take only 1 hour. It will take only one session, because the contract is the same, which we have discussed which we are going to discuss in the fixed price contract itself. Okay, we know how to transfer the information, the draft invoice into the AR, and we know how to transfer the revenue into the GL, and we know how to create an invoice, and we know how to create a revenue. And every process is the same, except the difference is in a fixed bid, the invoicing is based on the event. Here, the T&M invoicing is based on the timesheet. Only the difference is event and timesheet. The remaining process is the same. Okay. So for progress billing also, it will take another 1 session. Okay. So then we have the adjustments, etc., etc. Then we'll discuss. So next 10 days completely we are on the project billing module, and also the enterprise contracts module. Okay. So this is what the today's session is. Ranganath, can you stop the recording?
Yeah, sure.